So welcome everybody to the Texas REIAs. Texas REIAs is the largest network of real estate investor associations in the great state of Texas. It's been around for 20 years, has tens of thousands of members all across the great state of Texas, Austin, Dallas, Houston, and San Antonio. It's a beautiful and huge community of real estate investors sharing resources and tribal knowledge and other things that are helpful for real estate investors to grow their business and to grow their wealth both individually and collectively. We have meetings every month. We meet every day, every minute online, so we'll get you all to join the moderated Facebook group, and that's where you can interact with each other and me and everybody else here on an ongoing basis. And we also publish market updates frequently, just about every week. We post those onto our social media. And I'm going to do a little market update with you guys right now. So like I mentioned before, I'm the substitute teacher tonight, so I'm going to present my wife's materials, but I think I've got a pretty good handle on it, so let me take a shot at it. So what's going on in the real estate market? Where are we and where are we going next? Well, I think the best thing that I could use to describe the market is it's going like this. It's not really going anywhere at all. It's pretty much flat. Now, Austin has some unique issues. We're here in Austin, so Austin's a little different than the rest of the state, as you'll see in a minute. But obviously the big story with real estate is interest rates. Interest rates have gone up, right? They used to be freakishly low and now they've become normal again, right? 7% mortgage is considered a normal mortgage. So yeah, interest rates have gone up. And when interest rates go up, what happens to home prices? What happens to home prices? When interest rates go up, what happens to home prices? I'm seeing some different answers around the room. Here's what happens to home prices. They go like this. They go up and down at the same time. Yeah, interest rates have both upward and downward impact on home prices. Certainly what everybody knows is homes are less affordable. That's obvious, so fewer people can afford homes. But the thing you have to understand about real estate, if you want to know where prices are going with real estate doesn't care much about the economy. It really doesn't care much about interest rates. What it really cares about is supply and demand. Real estate, more than anything else, is driven by supply and demand. Okay, so for example, the economy. People think the economy drives real estate. It's the other way around. I'll give you an example. During the Great Depression, real estate prices went down a whopping 6%. Basically nothing. During the Great Pandemic, we just lived through the Great Pandemic, another one in a 100-year event, right? The real estate prices went up about 30%. It wasn't the economy that drove the real estate. It was supply and demand that drove the real estate. 2008, we had a big crash in 2008. Why did we have a big crash in 2008? Because up until 2008, anybody could get a loan. If you wanted to get a loan, you walked into a bank, you said, I would like a loan. A banker would walk up, they'd hold a mirror under your nose. If they saw fog, you got a loan. That's what they used for a loan application back in 2007 and 6. And of course, that was really stupid, right? Subprime lending, that was like a phenomenally dumb idea. So, but anyway, everybody got loans. So they're giving out money like drunken sailors, right? And we're building lots of houses, and how do we sell all those houses? Well, anybody could get a loan, so we're selling all those houses, and then in 2008, all the banks went bankrupt. Right, lending stopped. It didn't slow down. It just hit the wall. It just stopped, right? And the government, you know, you may or may not remember. They remember all that mark-to-market stuff. The government actually changed the definition of bankruptcy in 2008. They didn't call it bankruptcy, but it was bankruptcy by any reasonable, logical definition of bankruptcy. All the banks went bankrupt, and they got bailed out. And eventually, they got back in lending. But what happened with supply and demand in 2008? We built all these houses, way more houses than anybody needed, and then all of a sudden, lending stopped. So the buyers just disappeared. So you get a huge supply and no more demand. And what happens when you get a huge supply and no more demand? Crash, right? The market crashed. Now, what's happened in this market? In this market, we've got inflation, right? We got inflation. That's the story, inflation. Now, most people, when they talk about inflation, they talk about it like it's a bad thing, inflation bad. Now, I disagree. I love inflation. I just have another name for it. I call it appreciation, okay? Because that's what real estate investors call inflation. We call it appreciation. We love inflation, right? And if you own a lot of real estate, you're very excited about all the inflation, i.e. appreciation. So yeah, that pushes prices up. But of course, when real estate prices or interest rates go up, makes affordability less, so it reduces the demand. There's fewer people that can buy a house, right? So the demand has gone down, but the supply is still not keeping up with the demand because people keep having babies and especially keep moving to Texas. On a national basis, we're actually in a housing shortage. We actually have 6 million fewer houses than we have people that need a place to live. So we have a problem with supply, where there's not enough supply. So even though the demand has gone down, there's still not enough supply. And it's not until you get the demand way below the supply that it actually pulls the prices down. And that's why I say it's kind of doing like this. Now, the other thing about interest rates is it's done some really interesting things with the market, okay? Existing homeowners are not selling, which is also affecting demand. Why? Because everybody got a mortgage over the last 4 or 5 years, got one of those 3 or 4 or 5% mortgages, and they're like, man, I ain't selling my house, and then I'd have to buy a new house and get a 7.5% mortgage. So nobody wants to sell. So if you look at the mix of houses that are being sold right now, they're all new houses. New houses have doubled in sales, existing houses have halved. So it's really gone crazy, right? But the bottom line is there's still not enough houses for sale. So the market has shrunk. There's a lot less houses being sold, which means there's less supply. The demand has gone down because they're less affordable. And when you kind of put all that in the blender and spit out the other end, prices are pretty much flat or down just a little bit. So let's take a look at the different markets, and we'll even dive in to all of the markets one at a time. In Texas, the number of units being sold down 8%, a little bit, not a whole lot. The prices actually, July went up a little bit, but the average year-to-date price is down 1%. So yeah, what does that tell you? It tells you not much has actually happened. San Antonio, flat, down 1% for average price. Austin's a little bit of an anomaly. Prices in Austin are down about 10%. Now, here's the thing about Austin. In most of Texas, prices over the last 2 years, two years prior to this year, went up about 30%. In Austin, prices went up about 40%. So in most of Texas, prices went up 30% and then they flattened out. In Austin, they went up 40% and then they came down 10%. So in other words, over the last 3 years, Texas is up 30%, including Austin. But if you bought your house in the last year, I'm sorry, the market went down in the last year. So where is it going next? I don't know. I mean, nobody really knows exactly what's going to happen in the future. But if you look at the supply and the demand, we're still not building enough houses. And with lending becoming more difficult and expensive, builders are actually slowing down, which is going to cause a long-term supply problem. Okay, but people keep having babies and keep moving to Texas, so demand is not slowing down. And by any historic standards, that means eventually, in like pretty quick now, prices are probably going to start going up again. Unless interest rates go way up, which is possible, which will cut down the demand. So you put all that in a blender, our prediction is that prices aren't going to do much for the foreseeable future, right? They may go up a little, may go down a little. There's no huge thing that would cause them to change dramatically. Now, if eventually interest rates come back down, like some people would say, maybe the Fed is going to raise interest rates one more time, and then over the next year or so, they're going to start to come down again. If that happens, what that will probably do is cause a big increase in prices of houses, because then they'll become more affordable again and again. We don't have enough supply, but we still have a growing demand. And historically, when that combination hits the blender, the prices go up. So on Texas, if you look at the Texas statewide numbers, average house in Texas is, what is that, 429,000, up a little bit. Interesting. So I was reading an article in the Wall Street Journal just yesterday, and it said that on a national basis, for the first time in about a year, prices have actually ticked up. And a lot of the experts are saying, well, I guess the housing correction is over, right? It wasn't much of a correction, but whatever it seemed to happen, some people are saying we bottomed out, and it wasn't much of a bottom. But that may be possible. I'm not sure, right? Average house prices in Texas actually up a little bit. Median price is actually down a little bit. Now, this is the number I look at more than any other number, months of inventory. Months of inventory is a statistic that tells you, like, if we stop building houses, if we stop putting any more houses on the market, and we just sold what we got, until it was out, until there's no more houses left, how many months is left? And it's about 3.3 months of inventory. Now that also tells you on average how long it takes to sell a house, 3.3 months. Okay, that's the average on a statewide basis. Each city is a little different. We'll go through the cities in a minute. But historically, to put that in perspective, they say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. And you can see 3.3 months, that is still considered a very strong seller's market. So interestingly enough, with all the things going on, we are still in a crazy strong seller's market, because the historic average is closer to 5 to 6 months of inventory. Pending sales, kind of flat. I guess it's down a little bit. Active sales, when inventory goes up a little bit, active sales goes up, so it's gone from 83 to 95. And this is Texas-wide. In 2021, prices went up 18%, almost 20%. 22 prices went up another 10, 11%. And then this year they went down 1%. So you net that all out over the last 3 years, prices are up about 30%. Now, if you look at the different markets, Dallas-Fort Worth, average price 514, up about 3%. Now this is new. That's a bigger uptick than we've seen in some of the other markets. Median price down 1%. Months of inventory, actually 2.7. Now I'll tell you something interesting about Dallas. We've been tracking and doing market updates across Texas for a decade, right? So we do this literally every week for a decade, right? And I don't know why, I don't know exactly why. There's probably reasons that I don't know, but Dallas has always been the bellwether of Texas. If you look at Dallas, it's always the first to change. So when the market is going up, it's the first one to tick up. When the market goes down, it's the first one to tick down. And if you ever kind of want to guesstimate like what the market might be a couple months from now, look at Dallas. So it's always been the bellwether for whatever reason of Texas. And interestingly enough, some of the lowest months of inventory and some of the biggest uptick in recent home values. Pending sales down a little bit, 16%. Active sales up a little bit, only 5%. And kind of the same thing as we saw in the statewide, up 20%, up 15% 2022, and now it's pretty much flat in 2023. San Antonio, the most affordable marketplace in Texas, average sales price $387, flat. Median price down 2%, not much difference. Months of inventory, actually the highest months of inventory, interestingly enough, in Texas is in San Antonio, but it's still a pretty strong market at 3.8 months of inventory. Pending sales are down a little bit, active is up a little bit. Whenever you have an increase in inventory, you have more active sales to go along with it. They didn't get the biggest run up as some of the other markets, up 16 and 12, down 1. And then we have Austin. So Austin, the average sales price in Austin, yes, that is correct, $523,000. Holy tamale. Yeah, we did a little research on where the name Austin came from. It turns out Austin is Latin for San Francisco, yes. It's pretty much become the San Francisco, right? All the high-tech jobs and all the high incomes that come with them and the huge influx of people. I saw one study that said Austin could overtake both Dallas and Houston in population over the next 25 years. I don't really believe that. There's only one expert that says that. Everybody else says there's no way that could happen. But just based on the recent growth trajectory, if that continued, which it wouldn't likely, but if it did, yeah, Austin's growing at a phenomenal rate. It's the fastest growing top 25 city in the U.S. Months of inventory, 3.7, still pretty strong months of inventory. It's obviously the least affordable place in Texas. Pending sales down a little bit. Active sales obviously up a bit. And just not much, right? I mean, there's just not that many houses that are being sold and bought, all right? And that's just a contraction in the size of the market due to just nobody wants to sell because everybody's locked into their nice house and nice interest rate if they got it in the last few years. Just to kind of go through the history, yeah, 2021, nice year in Austin, price up almost 30%. Then in 2022, another 10%, so we got about a 40% uptick, and then about a 10% down. So still about 30% over 3 years, but the one anomaly is Austin kind of just got on fire. There were some months in Austin where we literally had less than 1 month of inventory. In fact, I remember 1 month, I think we had 0.5 months of inventory, maybe even 0.4 months of inventory, which means like 2 weeks of inventory. And that meant like you put a house on the market and it was like you'd get 6 offers in a day, just like that. I mean, these things were just so flying off the shelf, insane. And when you have that kind of a crazy, insane market, people were just paying stupid amounts of money. So the market was really, I would argue, over the last couple of years, properties were selling for more than they should have been, more than they were really worth, just because people were in a frenzy and people were coming here from California and they were putting an offer on a house, they'd get outbid, put an offer on a house, they'd get outbid, and that happened like 10 times in a row, and they got furious, and they'd be like, just offer them 20% more than they're asking, because I don't want to, I'm tired of, getting outbid, right? And so we had some crazy stuff that happened because of the crazy low inventory. But, for those of you that are saying, oh, prices are down, yeah, prices are down a bit, and it's all perspective, right? If you bought a house last year, it sucks, it's down, right? If you bought a house 3 years ago, it's pretty awesome because it's still up. And, by any historic measure, 3.7 months of inventory is actually a pretty strong seller's market. Houston, average sales price, $428, also pretty affordable. Median price, what is that, $340, down a little bit, average is up a little bit. Months of inventory, 3.2, that's similar to what we saw in Texas wide. Pending sales is actually up a little bit, kind of an interesting uptick there. Total active is also up a little bit. So that's what's going on in the marketplace, and we're about to kind of switch gears and switch presentations. But do we have any questions kind of on what's going on in the marketplace? Anybody have a question on that? This is from mostly the Aggies. What school is that again? A&M School of Real Estate. I don't know why I didn't know that, but I am a Texan. But yeah, the A&M School of Real Estate publishes fabulous data every month. And then there's several other sources that are published by the Board of Realtors and some other places as well. If you follow Texas REIAs on social media, we publish these updates literally every week. So if you want to stay abreast of kind of where the market is, just follow us on social media and you'll see these updates.